Whoa. Today's market,
Yeah.
it's throwing some serious heat out there.
A lot going on.
Yeah, we've got like meme stock mania, pre-market plunges.
It's crazy.
Enough earnings drama for like a whole season of billions,
Definitely.
So we are going deep today.
Buckle up.
Yeah, deep into Wall Street Bets to like unpack the most talked about reports and see if the hype actually,
See if it matches reality.
yeah, matches the reality.
Yeah, it's interesting though, right? Because you see these individual stocks, like all this crazy stuff's happening.
Yeah.
But then you've got these big, like these broader market trends.
Yeah, for sure.
Like, are we going to see a correction?
Yeah.
What's going on with like tech and all this AI stuff?
Yeah, okay, let's get into it.
Yeah, let's do it.
Microsoft.
Big one.
Yeah, everyone was waiting for this.
Everyone.
$500 a share.
Magic number.
That was it. That was like the number that everyone was talking about.
Chanting it.
Did they hit it? Did they come close?
Well, no, not quite. I mean, their earnings weren't bad. They weren't bad at all.
Okay.
But they didn't really deliver that knockout like everyone was hoping.
Yeah.
And I think, it's interesting because the market's reaction, it wasn't totally about like the actual numbers. It was more about the difference between what people expected and what actually happened.
Right.
That gap.
So, okay, so then you've got this post-earnings dip, right?
Yeah.
So is that like a genuine
oh, shoot.
oh, crap, they're in trouble? Or is this just, buy the rumor? Yeah, sell the news.
I mean, it's hard to know for sure, but the timing's weird.
Yeah.
Especially with what happened with AMD yesterday.
Right.
That dip, it kind of felt like it was, foreshadowing what was going to happen with Microsoft.
Yeah.
It's almost like this ripple effect, Investors getting scared by one and then just reacting the same way to the other one.
Okay, so maybe there's a bigger correlation there than people realize.
Could be.
Also, the Theta gang.
Oh, yeah.
They were probably just...
popcorn.
Yeah, just eating their popcorn.
Loving it.
High five, potential dip. It's like, Theta gang heaven.
Oh, absolutely.
Right.
Theta decay is a beautiful thing when you know how to play it.
Yeah.
The real question is, did those option sellers, did they get it right?
Oh, good question.
Or did the market just swerve on them?
Yeah, we'll see what happens.
Yeah, it'll play out.
Okay, let's switch gears here. Meta.
Another giant.
Yeah, another tech giant. The community was throwing around some pretty wild numbers, $700, $800 share.
Right.
Where was this coming from? All this energy,
I mean, there were a couple of things. First, I think a lot of people feel like Meta's kind of underestimated.
Okay.
Constantly underestimated.
Yeah.
They do better than people expect. And I think people were kind of betting on that to continue.
Right.
And then, you can't forget about the Zuck factor.
The Zuck delivering the Shrek come comment.
Oh, yeah.
That was, very descriptive.
That's the community for you.
Yeah, but it captures it.
They're enthusiastic.
Yeah, enthusiasm.
But it's not all just memes, right?
Yeah.
There's real belief in Zuck and what he's building.
Okay, but wasn't everyone like sunshine and rainbows?
Right. There was some warning signs, too.
What were people saying?
A lot of talk about the high IV.
Yeah, that's a big deal for anyone playing options, right? Can you break down, like, why?
Yeah, so high IV, it means the options are expensive. You're paying a premium for the potential for big moves.
Okay.
But it also means you could get hit by IV crush.
Ouch.
So when the volatility drops after earnings, those options prices can tank.
And it doesn't even matter if the stock goes up or down, right?
Exactly. Up, down, doesn't matter.
So high stakes, basically.
Yeah, you could win big or lose big.
Yeah. Earnings season with high IV stocks is not for the faint of heart.
Definitely not.
All right, let's talk about a company with a totally different vibe.
Okay.
Starbucks.
Interesting one.
A lot of the community seemed to be betting on a dip.
A lot of puts flying around.
What was driving that?
Well, there were concerns about market saturation,
How many pumpkin spice lattes can they sell?
Exactly. And there were whispers about changing consumer trends. Maybe they're worried about the pricing. I don't know.
Right.
But when the community senses weakness, they go for the puts.
And I saw one user was like really wanting to short Starbucks.
Yeah.
Makes you wonder how much of this is about the company itself and how much of it is just like the gamble.
That's the age-old question, right?
Yeah.
FOMO is a powerful drug. Sometimes it works out.
Yeah.
Often it doesn't.
Leads to some bag holder stories.
There's so many bag holders.
So the lesson with Starbucks, maybe it's more about managing your own psychology, right?
Maybe. Earnings season isn't just about the numbers. It's about mastering your emotions.
Right. Okay. Let's move on to a stock that has been, like, defying gravity.
Okay, which one?
Carvana.
Oh, yeah, CVNA.
It's been climbing and climbing and climbing, and people are wondering how to play this earnings, you know?
Yeah.
Do you ride the wave or do you try to time the peak?
Well, CVNN's been on a tear. That kind of performance, it always gets attention.
Yeah.
But the question is it sustainable?
Right.
I mean, their success has been driven by a bunch of factors, right?
Like what?
Increased demand for used cars.
Okay.
Their online platform is pretty innovative.
Right.
And, let's be honest, a decent amount of hype.
Yeah, but those gains make people nervous too, right?
Oh, for sure.
Like, how much higher can it go?
How much higher can it go?
Who has the gonads to short CVNA now? That was a question.
Bold moves.
Yeah. Shorting a stock that is on a vertical climb like that, it takes some,
Guts.
serious guts.
It does. It's a real test of conviction.
Yeah.
And sometimes those contrarian bets, they pay off big. Yeah.
But you got to be ready if you're wrong.
Yeah, it could get ugly.
It could get real ugly real fast.
Okay, let's wrap up this first part of our earnings extravaganza deep dive with a company that has become kind of the symbol of the meme stock era.
Oh, I know where you're going with this.
Robinhood.
Robinhood.
And from what I saw, the sentiment was super bullish. People were loading up on calls like crazy. What was driving that?
Well, Robinhood always has this meme stock energy around it, right?
Yeah.
Remember that RDDT rally a while back?
Yeah.
I think some people were hoping for a repeat performance,
Oh, interesting.
believing Hood could catch that same wave.
Okay.
But there were some actual fundamental factors, too.
What else were people talking about?
User growth is always a big deal for a company like Robinhood.
Right.
They've been working hard to get new investors,
Yeah.
and people wanted to see those efforts pay off in the earnings.
It makes sense.
Yeah.
And then you have the psychological factor, right?
Yeah. People who missed out on those previous rallies, they want to miss out again.
It's that fear of missing out on those tendies.
Right.
And they're also adding all these new features, like election betting.
Yeah?
That definitely added to the excitement, tapped into that gambling spirit on WallStreetBets.
Oh, yeah, for sure. But there were some concerns, too, right?
Yeah, there were definitely some concerns.
I saw one user mention the company's balance sheet, like all that promotional spending. Is that something investors should be worried about?
It's worth keeping an eye on, that's for sure.
Okay.
I mean, short-term gains are great.
Right.
But you want long-term sustainability, right?
Yeah.
So aggressive spending can be a sign of growth. But if it's not turning into profit, that's a red flag.
Okay. And then there's IV Crush again.
Oh, yeah. Just like Meta.
One user actually asked how to avoid it. Any advice?
I hate to break it to them, but there's no magic bullet for IV Crush.
Right.
It's just a risk you got to take with options, especially around earnings.
Yeah.
I mean, there are things you can do, like selling premium or buying further out of the money options.
Okay.
But those come with their own risks.
Right, trade-offs.
Exactly, trade-offs.
So with Robinhood, it sounds like high risk, high reward.
Pretty much.
But did they actually deliver? Or was it like Robinhood, no, as one user put it?
Well, you'll have to wait till the next segment to find out.
All right. Stay tuned to find out how the meme stock darling did. All right, so we left off with that cliffhanger. Did Robinhood, take off like everyone was hoping?
Well, not exactly.
Right.
More like a slow descent. I mean, the earnings, they weren't terrible.
Okay.
But they didn't exactly, meet those crazy expectations.
Right, like everyone was hoping for fireworks.
Fireworks, exactly. And sometimes the market's already priced that in.
Oh, interesting. So it's like the good news was already baked in.
Could be, yeah. And when expectations are that high,
Yeah.
even a small miss can spook investors.
Yeah. Right. It's like everyone's expecting a rocket launch and they get, a hot air balloon.
Pretty much.
Speaking of things falling back to Earth, Supermicro Computer, Inc.
Ah, yeah.
This wasn't just like, oh, they missed earnings. This was a whole other level of bad news.
It was, yeah. That auditor resignation, that's a big red flag.
Yeah, for sure. I mean, when a company's auditor quits, that's never good.
Especially a big firm like Ernst & Young,
Yeah.
citing concerns about governance and transparency.
Ooh, that's not what you want to hear.
It's a signal to be very, very cautious.
And the market reacted
Yeah.
pretty strongly. SMCI dropped 30% pre-market.
Oof. Yeah.
That's rough.
It's a reminder that accounting scandals can just,
Yeah.
wipe out a company's value. Remember Luckin Coffee?
Yeah. What happened?
Dislisted because of accounting fraud.
Oh, wow.
And people were immediately making that comparison with SMCI.
That's scary. It's like you think in this day and age with all the information and AI and stuff,
You'd think.
You wouldn't have these kinds of surprises, but
Nope. Still happens. Due diligence is still crucial.
absolutely. No matter how much hype there is, you got to look at the fundamentals.
Especially in a sector like AI.
Right. Where everyone's,
Chasing the next big thing.
yeah, chasing the next big thing.
Big bubbles happen.
Yeah.
Got to be careful.
And in SMCI's case, it seems like maybe that bubble burst.
Could be.
It's no wonder people were calling it super scamio.
Yeah. Ouch.
And then that whole thing with trying to hire a new accounting firm.
Desperate times call for desperate measures, I guess.
Yeah, not a good look. Okay, let's move on to something a little more, I don't know, uplifting.
Okay, I like the sound of that.
Reddit, RDDT, had this crazy surge.
Oh, yeah, that was pretty wild. RDDT exploding pre-market up over 25%.
Crazy, right? What happened there?
What's really interesting is it wasn't just meme stock mania.
Oh, okay.
No.
So there were actual reasons.
Real, legitimate reasons. Strong earnings.
Okay.
Beating expectations on a bunch of key metrics.
So they were actually doing well.
Yeah, plus they're riding that AI wave, which investors love right now.
Right, right. And then there's also the whole irony of Reddit, the home of meme stocks, becoming a meme stock itself.
Yeah, it's like life imitating art, imitating life.
It's kind of beautiful in a way. RDDT lived long enough to become the meme.
I saw that comment.
So good.
But even with those fundamentals, we got to remember, meme stocks are still volatile.
Right, yeah. It's easy to get caught up in the hype.
FOMO is a powerful force.
Yeah, for sure.
Got to stay level-headed.
I saw someone was like, do I hold my 108 strike calls that are up 1,200%?
Tough call.
I bet.
It's a classic dilemma. When do you take profits?
That's the million-dollar question.
It is.
All right, let's switch gears again. Digital World Acquisition Corp.
Okay.
AKA the Trump Media Technology Group.
Ah, yes.
DJT.
This one always gets people talking.
It's the ultimate meme stock. Yeah, it's like a barometer for the political climate.
Exactly. And that's why it's so volatile. One headline, one tweet, it can all change.
And someone said, DJT puts, guaranteed to print.
Interesting.
Because they were to say, no matter who wins the election,
yeah,
the hype's going to die down.
The uncertainty will be gone.
Yeah.
And a lot of that speculative energy will disappear.
And I saw this one comment. It was pretty funny. Someone said they named their bowel movement Donald.
Wow.
In honor of all the bag holders.
That's creative.
Yeah. It just shows how much emotion is tied up in this stock.
Definitely. It's not just investing. It's almost like taking a side.
Right. High stakes, high emotions.
Exactly. So we've seen it all today, haven't we?
We have. Meme stock disappointments, accounting scandals.
Crazy rally.
Wild rides. Earnings season. It's definitely a time for both celebration and caution. It's been a wild ride with these earnings.
Yeah, definitely a roller coaster.
But like you were saying before, we got to look at the bigger picture too.
Right. Zoom out a little bit.
Yeah. So zoom out for us. What do all these reports, what do they tell us about the market as a whole? Like, where are we at?
Yeah, it's the question everyone's asking.
Right.
Is this like a turning point or is it just,
a blip?
Yeah, a blip on the radar. We've seen some crazy stuff, right?
Yeah, some companies are like way up, some are way down, and some are just kind of like, whatever.
Exactly, a mixed bag.
It's like that meme, watch list is rich as hell while they're eating ramen.
I've seen that one.
Yeah, but seriously, how do we make sense of all this?
Well, there are some patterns if you look closely.
Okay.
Valuations, they're definitely under more scrutiny. Companies that miss earnings, even by a little bit, they're getting hammered.
And the companies that beat expectations.
Especially if they have a good growth story.
Yeah.
They're getting rewarded.
Okay, so growth is still king. But the market is a little pickier these days.
Pickier, yeah. More discerning.
Yeah, about where that growth is coming from.
Yeah.
And we can't forget about interest rates.
Oh, right, the elephant in the room.
The Fed, what they're doing, it's making people nervous.
A little bit of anxiety in the air.
Yeah, like everyone's just waiting for
the other shoe to drop.
Yeah, waiting for the other shoe to drop.
That's tough, right? The market wants to believe in the AI future, but they're also kind of worried about a slowdown.
Yeah, I get it. So what do we do? What's the average investor supposed to do with all this craziness?
It's simple, really, but not easy. Do your research.
Okay, yeah.
Don't just follow the hype train. Look at the fundamentals.
Right.
Understand the businesses.
Yeah.
And be ready for volatility. It's going to happen.
So don't YOLO your life savings into the next meme stock.
Probably not the best strategy.
Okay, good advice.
The goal is long-term wealth, right?
Not just getting rich quick.
Exactly. Patience, discipline, and a little healthy skepticism.
Words to live by. Well, that wraps up our earnings extravaganza deep dive for today. Stay informed, everyone. Stay rational. And as always, happy trading.